Okay, so I'm going to try and explain the Universal Market Access Protocol, UMA protocol, in a kind of simple way. But for me, when I was learning about it, I had to really break it down and understand the fundamental of what's going on with value. And so I've tagged this UMA, the evolution of value, because it really stems from what is something called a synthetic asset. So if you go to the UMA website, you will see that it's a protocol, a platform for building and creating synthetic assets. But what is a synthetic asset? And so I was really kind of trying to understand this in my own mind. And the way I could only think about it is to take it all the way back and think about, well, what is money? What is value? And interestingly, when you look at some money, I just so happen to have 3 different types of money in front of me. The pound has written on it, "I promise to pay the bearer on demand the sum of £10. It's a promise. This piece of paper is a promise. The US says, "This note is legal tender for all debts, public and private." So this note represents a debt. In Japanese, there's nothing. So I don't know what this represents. It just says it's published by the Bank of Japan. But anyway, going back to the money, the pound is a promise. The US dollar is representative of a debt. A synthetic asset is just something that represents something else. And that's what money is. When you think about it, a note represents value. And when you log on to your bank account, you see your numbers, and those numbers are representative of something. Kind of Bank of America points are representative of US dollars. They're, in crypto terms, stable coins, stable digital numbers that represent cash. And interestingly, they're not even backed by cash or anything. I mean, you can take cash out an ATM, but there's not enough cash in circulation for everybody to withdraw their bank accounts. So that's another interesting thing. So when you really think about these synthetic assets, you've got to think about all these different things. So even like Starbucks points are synthetic assets because you can redeem them for things, or like a coupon for the local supermarket is technically a synthetic asset. And the synthetic, any asset or anything, has kind of 3 main pillars. You have to make it representative of something, you have to have a measurement of it, and then you have to be able to redeem that value. So in terms of a dollar, it represents, well, a debt in this case, but societal value, I guess. And then the measurement of it is the number 10, because it's 10 of these. And that measurement is upheld by the United States Federal Bank, I guess. And it's redeemable because you can use it. And it's redeemable for this particular value. So those represent, measure, redeem will become important. And when we think about cryptocurrencies and crypto synthetic assets, it's interesting to think that actually Bitcoin is a synthetic asset. It's a synthetic asset of cryptography. So proof of work and the trust mechanism built into the logic of the protocol. And that's a kind of interesting concept that Bitcoin itself is a synthetic asset. And then you have other cryptocurrencies like stablecoins, like DAI is a synthetic asset of the US dollar, and it represents the US dollar. It's pegged to it through complicated mechanisms, but it's pegged to it. And really kind of what UMA is doing is it allows you to, through smart contracts, to be able to create synthetic assets of essentially anything that can have a representation, so be represented by something, by a token or a coin or some cryptocurrency, it can have a measurement. So you need to be able to measure what this thing is, and you need to be able to redeem it. So those are the kind of three main points that you need to be able to build a synthetic asset on UMA. There's crazy examples, maybe I'll get back to those in a minute. But one particular example is kind of interesting. There's a project called Domination Finance, and this is a synthetic asset, or a couple of synthetic assets that track the dominance of Bitcoin over the rest of the cryptocurrency market. So when you look at the cryptocurrency tables like CoinGecko or CoinMarketCap, you see thousands of cryptocurrencies, and Bitcoin is the top, and then the rest are classed as alternative coins or altcoins. But what the dominance is, okay, what's the market value of Bitcoin compared to everything else? And so that's the synthetic asset. That's what you're tracking. So if you think that that Bitcoin's dominance is going to go up, so the market value of Bitcoin, the percentage over everything, will go up, then you want to buy into Bitcoin dominance, because then you're betting that it's going to go up. If you think that the Bitcoin dominance is going down because other cryptocurrencies or other protocols are going to have more value put into them than Bitcoin will, then you can bet the other direction, the altcoin dominance. And so that's a kind of an interesting project going on by Domination Finance. And another one, which is kind of more risky, is one called U-Stocks, which is basically a synthetic asset that tracks a bunch of different stocks. And those stocks are particular stocks that are picked out to be somewhat of a risky bunch, or a bunch of stocks that are hyped up in the market. And so recently we had things like the GameStop kind of hype, and obviously things like Tesla are typically hyped, and so it tracks those. So if you wanted to put some money into particularly these quite risky stocks, then you can do that through U-Stocks. Is a synthetic asset that tracks those. And so with synthetic assets and trading them and things like that, it works like anything. Like if I have, this cash, if I think this cash is going to be worth more in the future, I want to hold cash. If I think the value of my property is going to be worth more in the future, I will trade that cash in one day into a mortgage or a property, and then that property will outperform the price of the cash I used to have, and then in the future I can trade back and hey, I've got more cash. Synthetic assets allow you kind of to do this, and you can kind of do crazy things with what you can track. So you could track, I don't know, the number of Twitter followers Beyonce has. That's something that can be representative. You can measure it, and you can redeem it at a particular date. So you could say, okay, this synthetic asset will expire at the end of 2021, for example. And depending upon if you think Beyonce's Twitter followers will go up by the end of 2021 or go down, you can make that hedge either way. And then you could also track some things like the amount of carbon credits generated in the world, or the water level of the ocean, to keep on a climate theme, or the number of people concurrently in space. That's an interesting one, because if the number of people concurrently in space increases, that means the space market has increased overall. So that's kind of maybe a good metric to track. So yeah, you can play around with all these different things, and it's a kind of a really interesting concept that UMA has proposed. And this is all done, instead of just trusting people, this is all done through smart contracts and kind of optimistic oracles and things. So it's some of those are a little bit complex, but essentially you can basically make a synthetic asset of anything as long as it can be represented by something, measured by something, and redeemed by something. And if you have those, then you're all good. So going back to the name, UMA, universal, is everyone, anybody can get involved. Everything can be basically converted into a synthetic asset. Market is anything that can have value, can be traded, mortgages, houses, cash, through to Beyonce's Twitter followers, and access. So it's a platform and protocol for developers to create these things, or traders, or the curious minds to speculate on such things. So yeah, UMA, universal market access, the evolution of value.